Why don't they do recipe glasses? You put the glasses on and the recipe pops up on your face.
That's
the kind of thing these idiots do when they IPO. Just like GoPro and Snapchat, they do these idiotic things, getting away from their core business. Is new neurological evidence of shrinking of frontal lobes. The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded June 30th, 2017. It's the Money Path Podcast with Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On episode 78, The What and the Why is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a conversation with news in the markets.
Mike, I think you just like saying Boaty McBoatface, because I don't know what that has to do with the markets.
Because it's a follow-up.
Follow-up to what market-based thing?
We have other things that are not market-related.
Yeah, I know. And I complain about all of them.
People might care.
They should listen to Joe Scarborough then, where that news belongs. I think you just like saying Boaty McBoatface.
I do like saying Boaty.
Thank you. Just own it. That's all I'm asking.
I do, and it's back from its first mission.
I love the Ram truck thing.
Well, let me finish with Boaty McBoatface, because that's the highest priority of the show.
Yeah, let's make sure that everybody makes their path to money via Boaty McBoatface.
Well, it went to depths exceeding 13,000 feet in the Antarctic. So, I mean, that's pretty important.
What stock do you want to buy off that?
I know what I don't want to buy off of that.
Tesla?
No.
Deutsche Bank?
No. It just came out yesterday.
You want to buy both of those?
No, it just came out yesterday what I don't want to buy.
Blue Apron?
Yes.
I don't want to buy Blue Apron either.
That was not a good not a good IPO.
His stock went up at the end of the day, but was it the end of the day? Yeah.
It went up. No.
I'm sorry. I heard in the news that the stock actually went up, but they had lowered the price just before the launch.
Oh, well, they were originally talking about it $15 to $17 a share.
Right.
It ended up, they priced it 10. Mm-hmm. It opened at 10, ran up to 11 exactly.
And then closed around 10.
They closed at 10, and after hours it was trading $9.95. Pre-market ran up to $10.30. Then it traded down to a low of $9.70 so far today.
Do we know what the float is? Do we know how many shares were?
I'd have to look that up. But the market cap is, as of close yesterday, was $2 billion, which they had a private funding of $2 billion. So it was a very disappointing IPO. Let's put it that way.
3.2 billion debut is what it says.
Well, the valuation at the end was $2 billion last night.
Yeah, right. But they received 3.2 and basically in cash. Right?
This is not an IPO I touch.
They're right in Amazon's crosshairs with this Whole Foods thing. Amazon already has a food delivery service. How good does Amazon's food delivery service get if they're tied in with Whole Foods with it?
Well, but Blue Apron's also not the only competitor in that space. It's actually a rather crowded space, and this would seem desperation IPO land. Mm-hmm. So I would not touch. I'd be buying Boaty McBoatface before Apron.
All right, back on the show.
Well, now Stafford's brought up a few times the subprime auto stuff. Yes.
That's crazy what you put.
Now this is insane, because normally you get incentives by like having good credit or something else. Now This was a 2017 Ram truck in car dealer in Texas that you get an additional discount if your credit score is under 620, and I guess you have to finance through their credit department. You get an additional money off the price of buying this truck. A new truck, by the way. Mm-hmm. Now they're giving incentives if you don't qualify.
Crazy.
Could I just need someone to explain this to me, please?
I don't know. I mean, it's some sort of entitlement program. Where's that discount coming from? Is it some sort of government-funded entitlement program that I wasn't aware of?
From the private dealer. I mean, it's from the, it's from...
Right, but it's possible the auto industry is getting something to subsidize that somewhere, but I don't know what it is.
Well, I've never seen this before where you get additional money off because you have bad credit.
That's just crazy.
So I walk in there and say, I'd like to buy that truck, but my credit's good, so I don't get the additional savings?
Yeah, I mean, there's some times where all right, I need to think about how I'm going to say this. There's some times where these things make sense, where the people, like when the people who were paying their mortgage couldn't refinance because they were paying their mortgage, right? And as unfair as that sounds, there's a sense to it, because when the government is trying to help people that are quote unquote in trouble, it's not a political statement. I'd be against most of what I'm about to say, but when they're trying to theoretically help someone who's down on their luck, and then you come in and they're like, well, we can't help you because we've got a limited amount of money and you're not down on your luck. Sucks, but it makes sense. It's social engineering, and I'm against most of that, but I get the argument. This I don't get. That's why, like, when I saw you put it in the notes, I was like, this is amazing. I'm going to spend hours trying to figure this one out when we're done with the show. Be looking it up, trying to understand it. It has to be some sort of program that they're getting reimbursed for.
I don't think so.
I know a lot of guys that own car dealerships. They just wouldn't do this.
But you have to finance specifically through their company to qualify. So I think it's just more of the subprime auto stuff. If the people default, we're just taking back the thing. And we don't know their interest rate that they're getting charged or how else they're getting gouged. I mean,
it's a $55,000 Chrysler pickup truck. Think of its market. Come on, if they can move that metal, they'll move it any way they can.
And if you have bad credit, you should not. If your credit's below 620, you probably shouldn't be shopping for a $55,000 Ram pickup truck.
I mean, that must be the gig, right? If your credit's below 620, they just add 2 points to your finance rate, and they get 1,800 of that 1,500 back. I mean, it's got to be that.
2 points. I think they might be adding 10 points to your finance rate. If you make a couple payments, they've got their money back, and then you default. They take the truck back and turn around and sell it used, low mileage, or one driver. used. It's a 2 month. It's like almost a demo vehicle for them. All right. Well, we got it back in a couple months. The guy only got 1,500 miles on it. We can probably sell it at a higher price, because now with all their financing things, it got down to So the $55,000 truck got down to $40,340. They repo it in a couple months, and then they turn around and sell it for like $46,000 again. So we figured it out.
Mike, just move on and we'll get to it. Did we lose Michael?
We lost Mike.
Is he really?
I'm here, I'm just not saying anything.
What?
I'm here, I'm just not saying anything.
Right. Okay. The acronym updates. Is there an acronym update for FANG? Something has changed. What's changed?
Have you been following the price action of any of these FANG or or Fantasia stocks or whatever the current thing is?
There's an M in it now, too. Like, I saw an article about FANG. It was FAAMNG.
Well, M's got to be from Microsoft, right?
Yeah, it's got to be. I couldn't think of what else it could be.
Well, we talked about Microsoft people lumping it in, but they just didn't change the thing. The price action, though, has drastically changed. These things are looking very toppy right now. Mm-hmm. Facebook's actually probably the strongest. It's holding above. We'll probably have to do a weekend video review of these just to go over to show people graphically. But some of these, it looks like they're not getting the bounce on the. People are still coming in on these pullbacks, but they're just not getting the bounce. Things like Apple also trading at the bottom of its weekly rotation zone. If it gets a close below about 142, we could see this easily pull back to 132 to 133 area. That's Netflix also not looking good, bottom of its weekly rotation zone. If that breaks down, you could see Netflix drop from where is it trading right now? It's trading at 150. You could easily see this drop back to the 135 area. So a number of these, as I said, only Facebook looks like it's holding up. Microsoft is not that bad, but it's got to get, if it gets below about the 67 mark, you can see a decent drop in it. Tesla finally, big red bar this week, and it's still holding above its weekly rotations on the top part. But if you get a close below 350, we could see a quick pullback to 325. So some of these are looking mighty toppish.
I mean, Tesla's up 25% this quarter as of the open this morning. I'm not sure where it is right now. But as of the open this morning, it's up 25% this quarter. That I again, don't want to be Chicken Little all the time. Sometimes you like it, it's got to come down, and they don't. I hate for us to be those guys, but that's just 25% in the quarter is nuts. Well, for a stock that just doesn't do anything right. For a company that doesn't do much right other than convince people they're the future.
Well, we could see a number of these FANG and the Fantasia stocks.
I mean, there's a really sloppy double top on the daily in Tesla. It's very sloppy.
It's very sloppy.
There's a lot wrong with it. It's not one we would trade, but you can still measure the extension and predict that out. And then you've got stock companies that actually make money, like Boeing and Caterpillar, right? Caterpillar's up, I want to say it's like 11.5% on the quarter, and Boeing's up 13.8% on the quarter. And those are huge moves. And Tesla more than doubles those for the quarter. It's just, the logic, it just reminds me of Amazon years ago.
Uh-oh, Blue Apron update. Just traded down to 950. I wonder when they're going to. Now
you laugh, but that's a 5% move.
They're going to have to come out at some point with the underwriters of this and start talking it up and give their we're raising our guidance. It's going to be $20 stock. That's going to happen within the next couple days.
Yeah, we're getting into the drone market.
What?
That's a GoPro callback.
Oh, yeah. There you go. I wonder
Blue Apron's getting into the drone market?
Blue Apron is going to now. Blue Apron's going to take their $3.2 billion in cash, and they're going to develop a new frying pan that flies around the room and delivers the food when it's cooked.
No, they could do their frying pan through Ronco and help that company out. Why doesn't Snapchat just buy Blue Apron?
That would be good. Snap Apron. Call it Snap Apron. I'm maintaining now that social media is the new cigarettes. That's what social media is, and I'll tell you the parallels. And this is, cigarettes were sold and people bought them to be cool. Right? Things like Snapchat and Facebook and all that, people are on there because they're trying to be cool. Most people who smoked a cigarette did not get any cooler after they smoked it. Most people who post a lot on social media are not cooler because of the posts. The posts are mostly made up lies about their own lives. And they do Snapchat and they're like, yeah, here I am eating. And it's like, that was cool to do that because everyone thinks it's cool. Just like cigarettes. Right? And now there's actually a clinical term called Facebook depression. Psychologists have coined it as an actual clinical term, where if someone doesn't get enough social media likes on Facebook, Instagram, or any of those, they start to get depressed. And they look at other people's lives on social media and compare it to their own, and they start to get actual clinical depression, and they call it Facebook depression. So there's actually illnesses now coming from social media that social media companies probably know about, but they're hiding in internal memos that Congress will find in 10 years. And then there's things like secondhand social media sickness that I just made up. A friend of mine had lied to his now ex-wife a while back, and he was just like sick of being around her, and he said he was going to his mother's, and then he ended up in the background of a picture of somebody at a bar he didn't even know was there that was friends of his wife. So she took a picture of her and all her girlfriends, and there's my buddy in the background. So he got in trouble. Secondhand social media sickness. I think in 10 years there's going to be by the way, there's a law being proposed, and I couldn't tell you where it is, but I'll try and find out by the end of the show, where you can't sell a smartphone to a kid under 13. Now, that's too big brotherish for me, but the reason they're citing is new neurological evidence of shrinking of frontal lobes for kids when they spend too much time on their smartphone. Their frontal lobe actually shrinks or doesn't develop fully. And they attribute it to the smartphone usage, staring at the screen all day. So social media is the new cigarettes, because this particular law does not encompass selling a phone to them, just a smartphone. You can sell a phone to a 13-year-old that has text and voice, but not data.
I think the new Alex Jones segment is a success.
What's that? Was that Alex Jones?
Oh, InfoWars. They were growing babies and cows at one point in your monologue. You're crazy.
Just stop it. There are actual clinical diseases now attached to social media. They're mental illnesses, but I might have a mental illness that's clinical. It's called social media hatred.
Well, I think the adults get social media. They've learned the lesson is things can come back, and when you're young,
so they post pictures of their kids so that their family in Sweden can see them, and that's it.
It's people who haven't learned that lesson who get
which is
hurt
the majority of the youth.
Well,
I'm telling you, I think 10 years from now there's going to be campaigns for people to be off social media. There's going to be because remember how smoking declined because it became uncool. That's when smoking declined. It had nothing to do with cancer rates.
You want the kids markets. They don't know what smoking even is.
Right. I mean, it's not cool anymore. But social media is cool, and hopefully the next generation starts to think social media is lame, or there's some sort of campaign by nonprofits talking about how social media is lame and can make you ill, mentally ill.
You know where you won't be buying your milk from? The Walgreens and Rite Aid merger.
Oh, that's part of our SMART. S-M-A-R-T. Rite Aid is the R in the SMART fund.
There you go. How much is it up?
Well, they announced that, Rite Aid? Rite Aid's going down the toilet.
Damn it.
The SMART fund is the dumb fund. Yes.
Yeah, the SMART fund was the dumb fund, so that was fine.
But, we
didn't like the chart last week, as I remember.
Well, since now Rite Aid's down with the failed merger stuff, now Walgreens is going to buy still some of their stores, but they terminated the $9.4 billion merger agreement. They're going to buy 2,000 or more of Rite Aid stores for $5.2 billion. But they couldn't do the merger. They were getting feedback that the FTC led them to believe that they would not approve the merger. So they're buying about just under half of the Rite Aid stores. With that news, Rite Aid now trading down to $2.61.
Phew.
From $4 prior.
If I don't have a negative on my statement from the SMART fund, there's issues in the world.
Well, I can guarantee the SMART fund is losing. So, there's your update on the Walgreens Rite Aid merger that's not going to take place. And other groundbreaking news. It's time back into the FANG, the stocks. Facebook TV. Facebook's now going to produce TV quality shows with an eye towards launching original programming by late summer. It's willing to commit production budgets as high as $3 million per episode. It's interested in more moderate cost scripted shows in the mid to high six-figure per episode range. So you have Facebook's getting into everybody, it seems like, is getting into the I need to make my own shows thing. Snapchat is, Facebook is. They're also going to do short-form content, primarily unscripted, that could run to 10 minutes in the spotlight section for videos. The social network is guaranteeing creators a short-form fare a minimum of 5 to 20,000 share of ad revenue per episode. We have to get in on that short-form.
Well, this is, again, my rant was a little off base, but this is kind of it. I think part of the reason they're getting into their own content is they recognize the need to keep the eyes on their site, right? And some of the user-generated content is getting them in trouble. When people post alt-right stuff or far-left stuff or just outright disgusting things, and advertisers see them and want to distance from them. Whereas they're they're creating their own content. The more they move toward that, the more they control the ad revenue and the more they control the advertisers. So they have to move in this direction, because while user-generated content was cheap, it was dangerous and ended up costing them money. You have to think that Facebook, who is the best at all of this, knows that there's something wrong in their model for them to do this, because to acquire or to create content is going to be a lot more expensive than just letting people create content.
What their vice president of media partnerships, Nick Gruden, said, quote, "We're supporting a small group of partners and creators as they experiment with the kinds of shows you can build a community around, from sports to comedy to reality to gaming. We're focused on episodic shows and helping all our partners understand what works across different verticals and topics."
And there is your censorship. Helping all our partners understand what works across different verticals and topics. In other words, you can't do this and you can't do that because the advertisers will pull away.
And here's your tie-in. It hopes to target audiences from ages 13 with the frontal lobes to 34 with a particular focus on the 17 to 30 range. So we're not the target market.
Oh, the Bitcoin videos are.
Yeah, those are great. I'm in the background, I'm reading a research study from the U.S. National Library of Medicine and the National Institutes of Health on online social networking and mental health. I will prove my Alex Jonesian theory. All right, go ahead.
Facebook officially announced this week that they have 2 billion people on it.
Yeah.
Yay. How many people are supposedly on the planet right now?
Oh, I don't know.
It's 7 point something, isn't it? World's population. They estimated to have reached 7.5 billion on April 24th, 2017.
Wow. So I got 30% of the world's population on Facebook.
So let's get, what is the exact
percentage?
What is that? 2 divided by 7.5 is, come on, 0.26, so 26%.
Wow, the world's population is on Facebook. And guess who's not?
You.
Correct.
But you are on Twitter.
I am on Twitter.
And you'll be good to know that, I don't know if this is going to help save Twitter, but Twitter can detect crime up to an hour faster than police. New research has shown the ability to detect serious incidents much faster than police reports, up to an hour faster. So they're analyzing data from the London riots in 2011. Researchers at Cardiff University showed that computer systems could automatically scan through Twitter and identify potentially dangerous occurrences, such as windows being broken and cars being set on fire, long before they were reported to Metropolitan Police Services. The system could also identify Twitter rumors about where riots were likely to take place, as well as real-time information about areas where people were gathering. The researchers used a series of machine learning algorithms to analyze each of the tweets from the data set of 1.6 million tweets, taking into account the number of key features such as time they were posted, the location where they were posted, and the content of the tweet itself. The algorithms detected incidents quicker than police sources in all but 2 of the events reported.
Wow.
So there's another use.
So that's just from people posting it? Just from people posting stuff on Twitter?
Posting stuff and then analyzing the content of what's being posted, the timestamps and the locations, and then started tying it all together and saying, all right, we're starting to get in a mass grouping of people here. People are posting a picture of a car on fire, and so we probably have a hot spot area, and they can start running all the real-time Twitter information into these machine learning algorithms and spitting out this kind of analysis of, hey, let's mobilize police over there because there seems to be a riot starting or something else.
That's really cool.
That could be used for trading.
What do you mean?
Oh, you can gather information on companies and weather, that's weather and anything.
There's entire funds that have been doing that.
They already have algo scanning.
Yeah, algorithms where they scan Twitter and stock twits, and they take sort of the temperature of people's opinions of stocks.
Yeah,
and other things. Come on.
They analyze how many times a stock's mentioned on social media and everything, and the more it's mentioned, it can lead to momentum moves in the stock. So then they'll jump on with their algos. So another FANG stock, Amazon, has ended its feud with Nike. Well, Nike actually ended it with Amazon because
they're not stupid.
No, they were holding out and said, we don't want our stuff sold on Amazon because we don't have enough control over it. But what was happening is, you've talked about this with the third-party resellers, right, Bob?
Yeah.
I could go and buy a pair of Nike shoes and then decide to resell it as new because I didn't wear them, or I pick them up wholesale and I put them on Amazon, and I'm now selling Nike shoes on Amazon, which was fine with Amazon because they took a cut, but Nike's now realizing that they were losing out on all those sales. So
yeah.
Nike capitulated after years of resistance. Sneaker giant wanted more control of pricing and display, so now they're going to allow their stuff to be sold by Amazon itself. And that's going to be on July 13th. Well, Nike stock, with that announcement, jumped from the mid 53.30 area to right now it's trading at 57.50. So that was a big boost in their stock.
Smart move.
Yep. I'm watching Nike to see if it can get a close above 60 again, because if we get a close above 60, it'll trigger a really nice trade, possibly to about 63.50.
So it could be on a run.
It's trading up against significant resistance, though, so
I missed that for a minute.
As sophisticated. Bob, do you have anything to say on the oil markets?
Actually, no. Not much at all. I mean, so people are kind of waiting, I think, my opinion is, they're waiting for consistent draws, and we haven't seen them. If you look at the crude oil inventory numbers from the Energy Information Administration, the last 5 numbers, 2 have been builds, 3 have been draws, and one of those draws was an undershot of what the estimate was, so you can almost look at it as a build, because the forecast on June 14th was for a 2.7 million draw, and we got a 1.6 million draw, so that was almost like an increase of 1.1 million versus what the market expected. So people are looking for consistent draws on there. Now the sort of caveat here is gasoline, also distillates in general, have had 4 of 5 weeks of inventory builds. So that's showing that we should be at the peak of demand for gasoline and distillates right now, and that demand is not showing up in the inventory numbers. There actually is still an upward slope on crude oil demand, at least the estimates of crude oil demand, but until you see consistent draws in gasoline, the rally that we've seen over the last few days probably has a top to it. What's crude oil doing right now? I know my chart's up.
45.20.
So it's up again, right?
It's still trading roughly within yesterday's range. It's it looks like it's at least topping out from its, what has it had, like a 6-day rally?
Yeah, I mean, the chart I just opened on my smartphone, which is hurting my frontal lobe, is showing us up about 0.5%, which in crude oil to me is basically unchanged after being virtually unchanged yesterday. So today would be the 6th of 7 days if it closed up. The 6th of 7 days would be up. But when you look at a weekly chart, it's not much because the last 6 weeks, 5 of them have been down. So when you look at it from more of a big picture, this is almost corrective in nature. Yeah. And the stocks are not showing any sign of abating. And you need consistent draws from gasoline and oil in order for an up move to be sustained. We don't have that.
You're starting to break up a lot.
Yeah. Let me start closing things in the background.
You remember a number of episodes ago, we talked about that workhorse company with their pickup truck, the plug-in hybrid pickup truck, which looked like those wheels did not make sense.
Yeah, it looked
They've
like a
now come out with the massive human-carrying drone named Surefly that lets you glide above traffic jams. It's a massive, it looks like a quadcopter that you can sit 2 people in.
Come on, they haven't even released their truck.
Well, now they have a supersized drone can carry up to 400 pounds. There's space for either two adults or a passenger and some cargo. You'll need a pilot's license, but it's much easier to fly than the helicopter. It just has a simple joystick that moves it forward and backward and left and right. They're also working on a fully autonomous model. So there you go. You can also put down in the Tesla model of stuff, you can put down your $1,000 deposit to receive one of the first units built.
That's awesome.
So Stafford put.
But they haven't released their pickup truck.
I don't know when the pickup truck comes. I thought it was. I don't know. It's not like I follow the workhorse company every day. Hello. Well, in other cool tech or stuff we need to follow up on, because both Apple and Google had announcements this week. Apple is leasing a small fleet of cars from Hertz Global Holdings to test its self-driving technology. That's more limited, but then the Google is pairing up with Avis.
Yeah, Waymo.
What was that?
It's the Waymo division of Google.
Waymo.
Waymo's the company that does the autonomous driving that Google bought. Yes, it's the Waymo division teaming up with Budget Avis. Avis Budget?
Avis
Budget, right? They're the same company. I'm just wondering which one they're called now.
I
think it's Avis.
I thought it was Avis. 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 Oh, I forgot their symbols. Car. So, because both these rental car companies' stocks have been absolutely destroyed.
Yeah. So I love this, by the way. I absolutely love this team up. I freaking love it. I went nuts about it on Australian TV this week because they gave me the opportunity to. I love this deal. So the deal is just maintenance, right? They're going to do the oil changes for Waymo. They're going to vacuum the cars out. They're going to use their car washes, blah, blah, blah. But the implication is that you'll be able to land at an airport, pick up a self-driving car, and say, car, New York hotel, and it takes you to the New York hotel. And then it sits in the parking lot. And then let's not use New York because that would be a terrible place to do it. Let's use Tulsa, Oklahoma. Take me to the Tulsa Hyatt. And the car takes you to the Tulsa Hyatt. And then you look up on your Google Maps the barbecue restaurant you want to go to in Tulsa. And then you get in your car and you go, take me to Ray's Barbecue, Tulsa. And it takes you there. This is for cities that don't have the density of Uber and Lyft like Chicago or New York or some of the other cities where they're just everywhere. This is genius if they can actually make this a team up where you can now rent from Avis or Budget an autonomous vehicle. It's genius. It is so much better for a business traveler than an Uber or a Lyft. It's so much better. because it sits there. And in some of these cities, and I've experienced this, even in the outskirts of Chicago, where you go to call a Lyft or an Uber, it's a 15-minute wait. I mean, it's just genius, and it's a real good example of where technology can rescue failing industries. Because rental car industry, as Mike, as you mentioned, stocks are getting crushed because the industry was failing because of Uber and Lyft.
Yeah, well, Hertz got a little pop. Hertz, which is heavily shorted, so it should have got a little pop on a little short squeeze, but it was down to $8.52, now trading $11.54. Nothing I'd be touching yet from the Hertz side. From the one that did get the bigger, because I think that's more tightly integrated, the Google/Waymo one. That Avis popped up from a low of a couple weeks ago of 2071. Now they're trading about 27. So that's a very nice pop for Avis. I think Apple thing was more just, we're going to work with you, Hertz, to work with some of our self-driving stuff, where Avis and Google are more tightly integrating their model together.
It's interesting. Waymo, Google's division, has a fleet of, I think they're Chrysler minivans that they're, testing the autonomous technology in. And the only odd thing about it is a minivan would be an awful place to start the autonomous rental, because I doubt a family with their 3 kids under 10 going to Disney World are going to let the car drive them around. That's just going to be something people need to get used to, with the idea, and I don't know that it's a fact yet, but the idea that autonomous cars would have fewer accidents than human-driven cars over time, I think they would. But I think that's a big leap right now. There's no research showing it that I know of.
You want to know what was fascinating? This is something on the side. They released the results. Remember that guy who got in the accident in Tesla in Florida and died?
Yeah.
So he had autopilot on for over 30 minutes, and he only had his hands on the wheel for 25 seconds.
It's amazing he didn't crash sooner.
Yeah, so the car drove him around for 30 minutes with him virtually not touching the wheel at all. 25 seconds is pretty much, it's a statistical anomaly at that point. So essentially the car drove him for 30 minutes.
And I'm pretty sure Tesla doesn't recommend that.
No, because the car actually warned him 7 times to get his hands on the friggin' wheel, which he was too busy watching his DVD to do. But that's pretty impressive, though. I mean, think about that. We're still in this. The technology is moving pretty quick, but all these things aren't designed to just drive you anywhere yet. But the car drove for 30 minutes and gave him warnings like, you gotta take over here, and he, it didn't crash, but for 30 long minutes. That's a long time.
That is. I totally agree. And this again goes to my point that I think data over the long term will play out, that autonomous vehicles crash less than human-driven vehicles. I would much rather have 2 computers driving, one in my car and the other one in the kid that's texting next to me, than I would me and the kid texting next to me driving. That's a no-brainer to me.
Yeah, I think over time, but the technology's moving pretty quick right now, and
I'm all about it. I want an autonomous car that allows me to turn it off and drive if I want to. Obviously, I like driving, but there'll be most work days I will have my hands off the wheel, and I prefer to sit in the back seat if that's an option.
That's why I'm wondering, once this technology is really done and out there, at some point, if you'll even be given the option to turn it off, because that would sort of defeat, if there's lower accidents and everything else with the self-driving cars, are they actually going to give you the option to turn it off?
Yeah, man, that's where government will get involved, right? You're not allowed to turn off.
Yeah, it's going to be like, okay, you can't turn it off. If there's a problem, the car's just going to pull over to the side, and then you call Hertz or Avis, and the rental car comes and picks you up while your car's being fixed. You can't just try to operate your car without self-driving mode.
How many years did it take for the horse to get taken over by the automobile? and the horse just became a pleasure animal and was no longer?
That's a great question.
25 years?
Yeah, that's a great question.
30 years?
It's interesting, Stafford, because this particular thing is one of those things where humans all the time, if you study any behavioral economics, in most situations, humans don't choose the logical choice. And this is one of those where they would say, at least this generation and possibly the next, I don't know, would just say, I would rather be in control of my own life when the absolute data will show you that you're worse at it. You're more likely to die when you're driving. And it's the lack of logic of the people who don't want to get on a plane because they're afraid of flying, but they drive every day, where you're just 10 times more likely to die in your car than you are on a plane. Actually, the number might be higher than that. But it just happens all the time. So, yeah, I mean, that's a great point. That'd be an interesting thing to find out. How long did it take? I'm binging this. How long did it take? I'm on a crusade, by the way, to make Bing a verb.
How long?
Automobile to overtake horse and buggies in popularity.
The one I saw said 23 years.
Yeah, that sounds about right. I mean,
this one is saying 18 years before production of automobiles hit 1 million, which is what this particular person is using as their standard.
So you average the two, you're 20 years.
Yeah, about 20 years.
And I think once self-drive, I think that will be life cycle will be way shortened once self-driving technology hits.
Agreed.
Now you're gonna have your gut. I want to know how long though. Once it does hit, and that they say, okay, even if you have a non-self-driving car, you just can't drive it anymore.
You know what one of the factors will be, Mikey, is the insurance rates. I mean, when the insurance companies have enough data, and they're starting to say, you pay $1,200 a year to insure your car, but if the tracker on there says you use autonomous driving 75% of the time, it goes down to $900 or something like that. I mean, that's the other thing, the insurance savings on autonomous, once they have the data to crunch. So I think it's that 20 years is a good estimator, because it won't only be that, it'll be needing the data, having the data,
Yep. And that's just with the insurance company I have now, they sent the dongles to put in that port on your car.
Yeah.
And it was voluntary. I could have said no, but I'm like, all right, let's just see. It sort of tracks your acceleration, braking and stuff you do for 90 days. And if you go through it, they trimmed 20% off both my car insurance for both cars, because they had monitored the driving and determined I was a safe driver. So here's an extra 20% savings because they gathered the data that says, okay, you fall into this category and you don't do a lot of stupid things when driving, so we're going to give you a bigger discount. So that's directly going to apply to what you're saying.
Yeah, it's great. I think it's fantastic.
I mean, if they say, okay, you got a self-driving Tesla and you're using it, oh, well, look, we're going to shave your insurance rates in half, because as long as you keep your hands on the wheel more than 25 seconds. The Target's going head-to-head with Amazon now. Amazon's Pride Pantry, where you can, fill your box of stuff and they send it out. Well, Target's testing its own Pride Pantry-like delivery service. It's offering faster delivery than Amazon. You can fill a box with up to 45 pounds of stuff for a flat fee. And Target's undercutting Amazon by $1, pricing their box at just $5. And they're offering
stock must have gotten hit.
What?
Did the stock get hit off of this news?
Who?
It must have. Target?
Why would Target's offering the service?
I know, but it's got to be when did that come out? Because that has got to be just an absolute margin killer.
Well, their stock had already been hit. It actually rallied off this. Their stock's been in the toilet.
Yeah, I mean, a month of May was horrible, but
it's actually rallied since they've released this news.
I sell this news.
So, this is not a stock I'm looking to buy yet, just the technical patterns.
Chart's terrible, right?
Yeah. I'm not interested in this thing until it gets back above 57.50. And right now it's trading 52. So this is one I'm not going to try to be a bottom picker on, but they're going, after Amazon, faster delivery. And did you see this? This is fascinating. Walmart, tying with Walmart and Amazon. Walmart warns truckers it will no longer work with them if they move goods for Amazon.
Oh, see, that's dumb. That's dumb.
Well,
That's predatory stuff. They shouldn't do that.
Well, they're also saying, Walmart's telling trucking companies that it will no longer do business with them if they continue moving goods for Amazon. And this follows similar reports saying Walmart's request for its tech partners to stop using Amazon Web Services.
That's dumb.
Well, I actually think there is something with they are citing with these tech partners. They don't want because they found that they've been putting up internal confidential information and sharing it on Amazon Web Services.
Okay, that makes sense. Okay.
Which they're like, guys, there's plenty of other competitors you can use instead of they don't care what other competitor, just don't use Amazon because we're going head to head with them, and you're putting our documents up on their web, which they could technically access. So we don't want that. So you can't use them anymore. So that was very interesting.
Yeah, okay, I get the tech. That makes sense. And, hacking internally has got to be so much easier. For Amazon to hack Walmart if they're using Amazon Prime services has got to be. That makes it. The trucking thing I don't like. Well, why hurt the truckers? That's just not right.
They're saying, though, that I'm wondering how much Walmart represents around 14% of this is Swift's operating revenues. They're pretty. I mean, think about how much Walmart ships. Now, Amazon uses a lot of its own shipping stuff now. They're using more and more. So
yeah, Walmart has a real fleet that's very mature, and Amazon is building a fleet. That's competition because that's real rubber on the road.
Right. I mean, I understand. Like, they should, to me, try and lure truckers, not threaten them. Where they're saying, look, if you do for us, we'll give you guys bonuses here. If you stop dealing with them, they're predatory toward you anyway because they ship a lot of their own stuff. They're looking to eliminate you anyway. So try some sort of but why hurt truckers? That's exactly the kind of thing that people get mad about. There's someone in a distant friend relationship I have that doesn't want the word Walmart said in his house because his dad used to be a trucker. And he's just like, I don't want Walmart mentioned in my house. They killed all the small stores. And that's the exact kind of predatory stuff Walmart needs to have their PR people steer away from.
I just thought it was interesting.
It's definitely interesting.
Walmart's definitely, the Walmart stock, we said don't chase it a couple weeks ago, and it's had a substantial pullback from the $80 range to 75. Now it's trading 75.97. But it
broke too far, didn't it? I mean, wouldn't you want to? Isn't this one you'd want to buy kind of on the way back up now?
Yeah, it's pulled back to its rotation zone, pulled back to a prior breakout level. I think we talked about that on the show, about the 75 area, 74 to 75, and it pulled back a couple weeks ago, and now it's moving back up. People are interested in Walmart. This is to accumulate it. This is really good, especially if it does get on a daily basis a close above 77. It could pretty rapidly fill a gap back up to the 78, then the 79 levels. So that's what I'm watching for on Walmart. We also talked about, I forgot to mention this, we talked about Nike and Amazon. Nike, finally, this also made their stock pop. They released earnings this week. Fourth quarter earnings per share, 60 cents versus expectations of 50 cents, and revenue coming in at about $8.68 billion versus expectations of $8.63 billion. So they beat top and bottom line. The WTF roundup, here you go for you, Bob. Prada is selling a $185 paperclip.
What?
Sold by parties in New York. The Italian-made clip, it's actually a money clip that looks like a paper clip, but it's $185. So I think you should definitely get one of these. It hits your... I couldn't put this in Fashion Nook because it was more what WTF corner.
Seriously, how much of that will be on social media versus actually being used? I bought the Prada paper clip. I now have Facebook depression because I only got 300 likes. It's a beautiful paperclip.
Isn't it? It says Prada on the side.
Oh my God.
Like anybody's. Isn't that beautiful?
It is very pretty. And I'm going to let people know that if you were going to spend $185 on a paperclip, this is your paperclip.
It's a damn nice paperclip.
What's with the ridges on the outside edge?
The ridges? That says Prada.
If you melt it down.
No, if you look at the outside edge, not on the left image, but on the right image, it seems like there's a ridge in there.
It probably says invest in the stupid fund.
That's smart.
Stupid is smart. The smart is stupid.
Now we have Elon Corner. Remember we talked about the Boring Company? Well, and the aptly named. I get he had to do it because I always love saying waiting for Godot, but the machine's called Godot. So we've been waiting for it. And the Boring Company just completed cutting out its first segment with its drilling Godot. I've seen two different stories on this, that they're doing it outside, right across from SpaceX, but they had to get permit because they're actually going under LA land at this point. I've read two different things. They're doing a pedestrian tunnel, but also a car moving tunnel. So they actually got approval to go under LA, and they've officially started boring tunnels under LA. I just hope there's no earthquake soon.
Yeah, again, I mean, I guess they know what they're doing, but LA?
This
underground?
This might not end well. Although if you're just transporting goods underground via self-driving vehicles, fine. But I don't see people transporting. I hope they really reinforce these tunnels.
Yeah, just whatever.
But that's the latest Elon's Corner. Now, lots of cryptocurrency stuff.
Not muting. I love this stuff now.
Well, there's an ad. Visa wants to hire. This is Visa, the credit card company, wants to hire a blockchain engineer who's experienced with Ethereum and blockchain architecture to be part of a team tasked with building distributed application. This is funny, though. Somebody was making fun of this out there on social media. There's just one problem where the compensation will be generous. According to the qualification requirements, quote, total industry experience must be 8+ years, which is about twice as long as Ethereum has been in existence and roughly as long as the very concept of blockchain has existed.
So you must be one of the originators of blockchain.
Which people were then tweeting out that I forgot the good name of Bitcoin's originator. It's that Japanese name, I forgot.
Yeah.
They're like, only one candidate can apply.
And can they pay him enough? He's a mysterious guy, isn't he?
I think it means you have to have other experience, but
Satoshi Nakamoto.
Yes. So only Satoshi can apply to be hired by Visa. But Visa's now getting into the Ethereum and blockchain thing. IBM, Banks Blockchain Consortium picks IBM for trade finance platform. Tech giant IBM is building a blockchain-based platform for 7 big European banks. It's aimed at simplifying trade finance transactions for small and medium-sized companies. Trade finance was identified as one of the top areas where blockchain could have an impact. The blockchain technology provides an electronic record-keeping and transaction processing system which lets all parties track documentation through a secure network that requires no third-party verification. This contrasts with the present process that's a complicated paper trail that requires institutional courier services, is vulnerable to document fraud, and can take as long as a month to be completed. Quote, what we will have is a platform to bring buyers and sellers together and make transactions very transparent from the moment that the purchase order is issued up until payment. The general manager for trade finance at KBC, one of the banks in the consortium.
I would love for someone to chime in as to whether it's just completely counter to cryptocurrency logic that banks get involved. I'm sorry, go ahead.
Well, no, I mean, they're just using some of this technology now in other areas. That's what this blockchain, which was talked about, this blockchain technology is going to, even I think it's going to get into, we still have the 3-day settlement rule for stocks, right? There is, I guarantee in the next few years, it's all going to be done on a blockchain technology, and you're going to pretty much have instantaneous settlement for stock transactions instead of 3 days, because that's very archaic. That's how the Digital Trade Chain Consortium is aiming at the platform to be up and running and available for these businesses to use by the end of the year. A tie-in to last week, we talked about the Ethereum crash on Coinbase. Now there's a second, we talked about it was due to the speculation was one of these bad coin offerings. Now they're also saying that the crash was due to a result of someone placing a multi-million-dollar sell order at market price.
So there was a run on the banks, the crypto bank.
Well, they put in a market order to sell multi-million dollars worth of Ethereum, which then cascaded lower, hit a bunch of stop losses, and then traded down to $10 at its low from what did they put it in at? $3.20 initially when that sell order was put in. So, and it could be related to that ICO with somebody trying to flip back the coin offering into Ethereum and then sell the Ethereum, but they just dumped it. It triggered all those stop losses. But Coinbase is reimbursing losses caused by the Ethereum flash crash. So if your stop was triggered, I guess they're going to refund you the money. But if you actually had buy orders way down there, you get to keep it. I don't know what that's going to do to Coinbase, though, because
wow.
This is where we also say it's still the Wild West of trading. So don't invest stuff that, because Coinbase didn't have to do that. And if you do get flash crashes on any of these exchanges or they are hacked, the exchanges do not have to reimburse you. They're, I guess, doing the right thing to try to keep their business intact. But if they could have simply said, nope, it triggered sell orders and you have to take the loss. So just be prepared.
I want to take this opportunity off of what Mike's saying to dispel a myth. If anyone is listening to us and listening, we, the three of us understand trading. Okay, Stafford and Mike understand more of the technology of cryptocurrencies than I do, but there is no truth to the myth that's been put out there for years about stocks, and there's no truth to it in cryptocurrencies either, that the big guys are selling it lower in order to buy it back cheaper. The math of that doesn't make sense as a trader. A big shop can only push something a certain way. So the logic of that makes no sense. If something is going to rally back after a big sell-off, that means there's buyers. Okay, so for somebody to sell the market down, they'd be selling it into those same buyers. And by the time the price got lower, there would be no one left to buy it back up. So in order to sell something, you have to have access to it. You either have to own it already or you have to short it, hoping to buy it back lower. Okay, you're not going to sell a bunch of shorts down into buyers and then expect it to go back up. The math of that doesn't make sense. So whenever you read these things that the big guys are selling it lower so they can buy it cheaper, they lose a ton of money doing that. They either already own it, in which case they're pushing the price of their own assets down, or they're shorting it to buy it back. And if they're shorting it to buy it back, that means they're the ones buying back their own shorts. It doesn't make sense. The math of it doesn't work. So when you see people say the big guys are manipulating, it doesn't happen. Big banks don't look for you. They don't stop hunt you. Big guys don't do that. They have other things going on. Just want to throw that out there. It's a complete myth propagated by people who can't take their own responsibilities for their own losses in a volatile thing like cryptocurrencies or anything else. This was very rampant in the FX markets years ago, that the big banks were looking for your stops. That's just people trying to explain away the fact that they don't use proper risk management. And a lot of people in cryptocurrencies don't understand trading. Mike and I could teach you proper risk management if you wanted us to, but that's, sorry, one of those myths that aggravates me.
They're growing babies and cows.
No, that's not Alex Jones. Sorry, stuff. That's real stuff.
Chime in. If you're going to be trading, or in these cryptocurrencies, don't trade money you can't afford to lose, and not even from faults of your own. You shouldn't be trading with your car payment.
Right.
You
shouldn't say, I need a little extra money to pay my bills, I'm going to trade cryptocurrencies. You should take the extra money you have after paying your bills and trade cryptocurrencies if that's what you want to do.
Right. Exactly. So there's our public service announcement for...
Yeah, let's just dispel the myths that the big guys are looking for you. They're not. They trade.
It's actually me. I'm doing it all, Bob.
Yeah. There's this whole big guy myth. It's like this whole boogeyman thing doesn't exist. There's never been any evidence of it, and the math doesn't work.
It's me. I'm manipulating Ethereum and Bitcoin price.
Well, you are the big guy, Mike.
I am the big guy.
Big Mike.
We had some numbers coming out this week. We're in the U.S. economy segment now. Durable goods missed, coming in at minus 1.1%. Expectations of minus 0.6%. In April was revised lower to minus 0.9% from minus 0.7%. And big miss this week, pending home sales coming in at minus 0.8% versus expectations of positive 0.8%. Last was minus 1.7%. We have a couple revisions in GDP Now model is going to come out again later today, but earlier this week it was revised to 2.9%. Goldman cuts second quarter GDP estimates from 2.5 to 2.3 after weaker than expected core capital goods orders and shipments. And the positive news, though, is the Q1 GDP final revision is now up to 1.4% from 1.2 expected. Oh, and by the way, the IMF cut the 2017 U.S. growth forecast to 2.1% from 2.3% in April. Harker came out multiple times this week, but he started off the week with saying he expects 2.3% U.S. GDP growth in 2017. He said, views factors pressing down on inflation as temporary. I'd like to hear if you think the deflationary cycle is temporary and he also said fully expects balance sheet reduction will be very simple. Don't expect it to be a shock to the market. And then he came out after his inflation is temporary. He said there's an active debate on whether we are measuring inflation correctly. So how can you say it's temporary and you don't even know if you're measuring it correctly? And they may visit the rate view if inflation moves away from goal. Can I have your... Oh, and he also said they factored in nothing in terms of fiscal policy changes due to, government fiscal policy changes.
Yeah, pretty much nobody's doing that anymore.
Huh?
Pretty much nobody's factoring in any fiscal movement anymore.
No, they haven't factored in the fiscal policy changes that aren't going to happen now, is a way I took that.
Oh, I took it as they haven't factored in any changes.
So, well, did you have any thoughts on inflation?
Yeah.
Their model's correct?
It's funny to me because, again, we've talked about this plenty of times in how, in one hand, they are happy to look at what could happen, and in another hand, they're not going to look at what could happen. They're happy to predict that inflation, the dip in inflation is transitory, right? But they're not necessarily willing to cut rates or ease rates based on that. They need to be data dependent. But this past U.S. rate hike seemed to be more a case of doing what they said they were going to do and creating runway in case there's another crisis. And then, less than a week later, Janet Yellen says there's not going to be another crisis in our lifetime because the banks are too strong. So I don't understand it. If they're going to go on current data, the pervasive knowledge in the Fed is that it's easier to hike rates into inflation than cut rates into a slowdown. And I would tend to agree with that. But the fact that they hiked rates into this slow inflation completely goes against that. And now you see the ECB's inflation slowed as well. Granted, it was higher than what the market expected it to slow to. And we'll talk about that. But the European markets, to me, are more important than the U.S. markets right now, because to me, the U.S. markets are showing market slowdown. I think you'd agree with that, wouldn't you, Mike? The economic data has been much slower and has missed a lot lately. And we're not necessarily seeing that change in Q2. If inflation is wrong and they have an inflation target, I don't get that. I don't get what they're making policy on if they think they're calculating inflation wrong.
Get to other stuff, but it's all bizarre to me. Let's get to some of these other, because pretty much everybody was speaking. So we had Fisher talking, which he was calling for close monitoring of rising risk appetites. He said equity price to earnings ratios are at the top of their historical levels, and it would be foolish to think that all risks are eliminated, and high asset prices may lead to future stability risks. And the corporate sector is, quote, notably leveraged. And so that was Fisher's little rant. Dudley came out saying we must take financial conditions into account and Fed's communications effective on balance sheet normalization. So he thinks they've been communicating effectively on what they're going to, how they're going to normalize the balance sheet. Now, Kashikari says, what's the rush on rising rates when there may be some slack in the labor market? You already mentioned Yellen. She said the Fed is trying to be contrarian and looking for risks, and they can't rule out another crisis, but the system is much safer. But then she said, don't expect another crisis in our lifetimes. However, back to Kashikari, said on an interview with Maria Bartiromo, there's a probability of another financial crisis and bailout. I quote, I've heard from senators and congressmen and men and women on both sides of the aisle who are concerned that the biggest banks are too big to fail. We analyze the history of financial crises. We've now got a 67% chance today of another financial crisis in the next century and another bailout.
The next century.
Well, he's saying century, so.
Yeah.
It's all depending on what Yellen said in our lifetimes. Is that her lifetime or? Bullard came out and said he repeated that the current level of Fed rates are appropriate, and he says he doesn't think there's a situation where they need to be preemptive. We can wait and see with respect to future policy. He says the U.S. is not moving away from 2% growth, and that the FOMC has been largely correct that inflation was returning towards target over recent years. Then he came out and said it was disconcerting that inflation has gone away from 2%. They're talking inflation both ways. Oh, and he also, this was interesting, said they need to create a policy space in good times in case you need more quantitative easing in the future.
Yeah, they like to sparse that in. All the central bankers like to sparse that in. We've arrived in an era where the monetary policy will be manipulated, period. And that essentially is a central bank put. And that means that any major stock decline, people should buy. Please, I'm saying that tongue in cheek. I'm saying that as a sort of a sarcastic remark, because the Fed will just take care of it. So that's why we wouldn't have a crisis in our lifetime. Because as long as it's legal for the Fed to do that, or any central bank to do that, to do quantitative easing, the market will rebound in the medium term. So it is possible that we don't have this in our lifetime. When you look at how long it's taken Japan to collapse, they still haven't. And Janet Yellen is how old? It ain't happening in her lifetime.
We'll see. And finally, there's the balance sheet normalizing should not disturb the markets, they believe. And in Mnuchin news, no decisions have been made with regards to Fed chair. When's her term up, in 18?
Mm-hmm. Yep.
Well, Will she be back or not?
I don't know. I don't know if she's going to be asked to come back or not. I really don't. I think that's a very much political statement, even though the Fed is supposedly apolitical.
Now over to currency and international markets. We have to touch base on Google. EU fines Google a record $2.7 billion for abusing product searches.
Mm.
That is a big fine. So they say that they were ranking their own things higher than competitors' stuff and product searches, and they're going to penalize them by a $2.72 billion money grab.
Wow.
Yeah, that's the largest one ever. So I mean, Google's definitely contesting this because that's not a small amount of change.
Yay, the EU is the schoolyard bully.
Well, Google, quote, what Google has done is illegal under EU antitrust rules. It denied other companies a chance to compete on the merits and to innovate. Well, I don't know how it did that. And most importantly, it denied European customers a genuine choice of services and the full benefits of innovation.
Sounds like they're not
Google.
Yeah, they're not woke to SEO, bro.
Yeah, the EU has now shown a couple of times that they will do money grabs like this, and they'll probably get the money. Google has $90 billion in excess cash. Just pay it and stay the way they are. They don't demand changes, is the thing. They just demand the fine.
Yeah, that's what it's a money grab.
Yeah, they don't demand any changes. They just fine them. And it's interesting because they can do it again in like 5 years if they need another $3 billion. It's just like, hey, you're still doing it. Well, you didn't tell us to change it. Well, do we need another $3 billion?
So, yeah. Oh, and the latest Brexit, May says no EU citizen will be asked to leave on Brexit. They're not. I didn't expect them to. Like, we're leaving and we're throwing all you out. You now have Mario Draghi coming out this week. Now, in the Greek crisis flashback quote of the week, serious concerns remain over Greek debt sustainability.
It ain't over till the Greek lady sings, man. That thing is still going on.
How long?
It started in 2009.
I know.
I thought
2009.
Civilization was like 2000 BC. Oh, I'm sorry.
You're coming up on 8 years of this stuff. It's like 8 years of Greece. And this, again, the only reason I bring that up is because this goes to show how long these things can go on. When people trade today on a Brexit statement, please. It's just like Greece has been going on for 8 years. This is a huge market, and things have a long timeline.
Yep, and we have more Draghi news. He also said the ECB must be prudent in adjusting stimulus. He highlighted a recovering Eurozone economy that, quote, the threat of deflation is gone and reflationary forces are at play. And that the effects that keep inflation subdued are temporary and won't let inflation deviate from the trend over the medium term. But added that stimulus in the form of ECB's monetary support was still needed. And then the ECB's, is it Weidman or Weidman?
Weidman.
Weidman says expansive monetary policy is appropriate. I believe, as all my colleagues in the Governing Council, that in principle an expansive monetary policy is currently appropriate, was his direct quote.
I love the whole Draghi thing. The Draghi thing to me with rates. So Draghi, basically, the market took it as he was going to raise rates right away, or rates needed to be raised. And then they came back and explained it by saying they want policy to remain at the same level of accommodation. But in order to do that, they might need to adjust rates higher to match the economy. So they want to stay accommodative as the market goes up. So as the economy gets stronger, we're going to raise rates, but not a lot, just in order to not be overly accommodative to a growing market. So if anyone has a fear of inflation, to me, Draghi kind of believes my theory that the economy is now structurally deflationary, because he wants to stay accommodative even as GDP rises and even as inflation rises. That's new. That's interesting.
Well, then the pound rallied on Bank of England's Carney saying some removal of stimulus may become necessary if the economy improves. So that gave a boost to the pound. And then we have
I love the English bank. I love the UK's Board of Governors, or the governor of the Bank of England, because you get to say governor. Governor Mark Carney.
Well, that was very good, Bob.
That's lovely there, governor.
Oh, we
call you governor from now on.
We have to tie in now the Bank of Japan, Hirata, not planning to reduce ETF purchases until 2% inflation target achieved. So Bank of Japan's going to eventually own all the ETFs in Japan, is my prediction. Did
you see what their number is?
What's their number?
They reached 300 trillion yen in assets. 300, granted, the yen exchange rate's funny, but 300 trillion in yen in assets that Bank of Japan owns.
With one acquisition, you can own all of Japan.
I'm thinking I know where I should go raise money for our next fund. For the Bank of Japan.
And they also said the Bank of Japan says it plans to keep current pace of bond buying in July. So they're not adjusting their bond buying. And finally, in Bob's motherland country, Italian taxpayers to foot 17 billion euro bill as Rome bails out another 2 insolvent banks.
With what? What are they going to foot it with?
Then that should have been in the going to zero section. The Italian banking sector going to zero.
Yeah, so there's not supposed to be any more Italian bank bailouts, so they made another bank do it with taxpayer money. They made two other banks do it.
So they're not. You bank, you have to bail out this other bank, but we're going to give you the money to do it.
That's funny.
That's the Italian way.
Very funny stuff.
So that's in the tie-in with Italy, and
that stuff.
And we don't have any Kickstarter espresso projects this week.
Oh, is that thing still going? What was that thing called again?
The Mofo.
Easy.
No.
Espresso making iPhone case.
What was the other one? You won the cold one.
What?
You won the. Oh, there were 2 different ones we looked at, though. Remember
the case?
We had the Mo case, but we had the other one too. With the portable one, you could take the little pods with you and brew your espresso anywhere. So we have 2 things now. Well, we didn't see this one. This is new. That's still got 7 days to go. The Caflano Compresso, a portable authentic espresso maker, is now $75,000 funded versus a goal of $10,000. So it's going to be made. What is this now?
Caflano, the compact.
So it's did you find it?
On a YouTube video for Caflano compact.
Well, I'll have to put the link in to Skype. Here we go, right above our below the fancy paperclip. There is the link to the Caflano portable espresso maker, which they're showing you putting espresso over ice cream.
Yeah, $75,000 pledged of $10,000.
Wow, this is a very nice. This would have sold it for me. This is what sold it for me.
It's not coffee.
It's not coffee. That's the first thing.
It's Peruvian mud.
Hold on. This is breaking. Breaking news. the GDP Now forecast from the Federal Reserve Bank of Atlanta just came out. They've now lowered it to 2.7% from 2.9%, as mentioned earlier in the show. So that is a show update.
What percentage decrease is that? 2.9 divided by 2.7. Oh, it's almost a 1% decrease. So 1.07.
And in other humorous regional survey news, the Chicago PMI came in at 65.7 versus expectations of 58. Chicago PMI spikes to 3-year high, beats by 7 standard deviations.
This is the weirdest thing. You guys have got me on a thing now. I'm looking at a mini Presso GR, which is a portable espresso machine. You basically milk the thing. It looks like.
What is this called?
Mini Presso GR review. I'll put the link in Skype. It literally, you have to advance all the way to like the 3-minute, 30-second mark to watch it work. But it literally, the Keflano is way better because this thing. Oh, geez, I gave you crude oil inventories. I'm sorry.
Yay, crude oil!
Hold on.
Ladies!
What?
I gave you the crude oil inventory page. That's not what I wanted to give you.
Mini press.
Here.
You mean the Mini Presso GR by Wakako?
I guess. I don't know. I'm watching a review for it. You see the link I just put in Skype?
Yeah.
If you get to about the 3-minute, 30-second mark or so, go to like 3:15 in the video. You'll see the person basically milking the teat. Mike, do you have a what? Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com. My why is kind of the myth I already ranted about. That's what I meant to do, and sometimes I just can't hold it in. If you guys are going to trade anything that's volatile, whether it be some sort of abstract currency pair, abstract's not the right word, but if you trade something like Thai baht versus Japanese yen or something that's not liquid, when things are not liquid, they move. That's what cryptocurrencies are right now. They're very illiquid. And when they move big because there's not a lot of huge players in there to hold prices in either direction. That's why they move up so quickly, is because there's not a lot of people there that own it that are selling them. And that's why they move down so quickly. Just be very aware of people saying the big guys are pushing it around, because that doesn't happen in any market. You're talking to two guys with a combined 50 years experience in hedge funds, in banks. I worked in several different banks. Mike worked with several different hedge funds. I worked at a fund of funds. There's no truth to the big guys pushing things around. There is truth to the idea that large players will accumulate when things collapse. But they didn't push it down. It's the cumulative market that pushes it down. If big guys sell something, it's because they want out of it or they're shorting it. It's not because they want to get the price to a level to buy it. There's been several studies on this. If you do the math and you use the logic that the people say when they're saying those things, the math doesn't work. They lose money every time. So it is not a structural strategy. It's not something that's out there to get the small investor. What gets the small investor is not being willing to accept the large moves that come with illiquid vehicles. And that's what cryptocurrencies are right now. They're very illiquid. There's no one in there that fully understands the technology and the trading side and is active with tons and tons of money, leaving huge bids below to stop things from moving down quickly. Those people don't exist yet. They will at some point. They're starting to come in. What there are very smart people who, for specific cryptocurrencies, specific vehicles in any real market, will put in bids to buy way down below in case something happens. It's something Mike has talked to me in confidence about, and where he's going to put bids on cryptocurrencies way down below in which currencies they're in case there's crashes. So when there are crashes like this and the price recovers quickly, it's not some big guy. It's a bunch of people who buy and hold things that go, wow, this has fallen. I still like it for the next 3 years. I'm going to buy some. So stop looking for the boogeyman when you lose money. Is it boogie or boogie? Stop looking for the boogeyman when you lose money. When you lose money, it's because you risked too much, and you only look for the boogeyman when you've had too much at risk, when you've been greedy, when you've tried to accumulate something for a value that you can't afford to lose. That's all it is. It's just like anything else. Okay, you cross the street with too much traffic against the light and you get hit by a car, it's not because the car was out to get you. It's because you cross the street against the light with too much traffic. That's my why.
Very good why.
Thank you, buddy.
I got a what?
What's your what?
Google on a weekly basis. Mm-hmm. Confirmed but not yet triggered double top. Lower probability because it's against a weekly rotation zone. But what's fascinating about this, if we do get a close below 915, we could see it retrace its big run-up since the end of April, fully. The price targets would be, and this is what one I wouldn't necessarily short, is if you're looking to accumulate Google lower, the price target areas, first one is 861.50, the next one is about 843.50. And the lower target comes in above the rising 50-week exponential moving average, which is about 835 right now. So nice. You could see, and we mentioned, I actually didn't notice this earlier when I was going through all those FANG stocks, but this is where I say something has definitely shifted. And if this does trigger, we could see Google, retrace, pull back a nice, what's that, 5%? Mr. Calculator Boy?
Well, yeah, that's a very good pullback. I mean, that's exactly what we're talking about. You could see people, if Google pulled back 5-6% and then rallied up to new highs, you'll hear people say that was the big guys pushing it down to buy it lower. No, they sit there and hope that it goes lower so they can buy more. The people who are pushing it down are the ones who don't expect it to ever go lower, and so when it does, they sell it. Markets move. They move every single day. That's why we say it's so important to trade with targets. It's so important to trade with targets and to have your risk predefined. And to, if something happens, to move your trade to your stop or to your target. That's just what the market does. You look for reasons because you think you can control those reasons, and you can't.